Just keep
It's
talking.
all good.
All right, we are live, hopefully, I think. We had some technical difficulties this morning, you guys, so hopefully you guys are joining. Let me know definitely today when you get here, because I want to make sure that you guys can see and hear us, because we definitely had some technical difficulties. I am on my phone, which I never do, but we are at my in-laws. We're having a small, normally we have like a huge Thanksgiving with like 40 plus people. That obviously doesn't make a whole heck of a lot of sense. So we're doing just a small immediate family Thanksgiving. I'm at my in-laws, and the internet decided it did not want to cooperate. So I'm on my phone, which normally is not what I do. And I feel like I'm looking in a weird spot, you guys, I'm sorry. I can't quite figure out how to look in the right place. Okay, Stacy said that she can hear us good and see us. That's good. So that's a plus. So sorry we're a little bit late, but I did want to make sure that we brought this to you. I'm really excited today because I have a good friend on, which is always fun. So Kellie Vincent is a CPA as well. She does all kinds of things. She's a CPA. She's a virtual CFO. She does taxes. She does all the things. She is a dear friend of mine. She actually is one of the people that kept me sane through the whole, world that we've been living in for the last, 9 months-ish now. And if any of you guys downloaded the PPP tracker, for instance, and you were wondering how the heck all of this came together, so that was Kellie and I would be swapping that thing back and forth, and then Bree as well. And so that was kind of a brain trust of several people. So a lot of people have been using it. A lot of people have been sending it to their bank. So say thank you to Kellie as well, because she was a huge part of making that whole thing come together in what we called Operation We Got You. So
We got you.
We got you. So yeah, it was crazy. So this is a really interesting topic, and I wanted to bring Kellie on because she's written kind of a little blog about it, which I have linked up above. If you're on Facebook, down below. If you're on YouTube, you can go and sign up for her newsletter, but it'll send you the blog article, which also has a really cool decision tree in it, which I love. Like, by the way, I'm such a nerd. I love decision trees. I don't know about anybody else. And so we're going to talk about employing your kids, and we're going to talk about why it's important, but we're also going to talk about first how to do it right, because that's the key. You got to do it right. And then we're going to talk about why it can help you and how it can be a good tax saving strategy for you. Because a lot of people were asking this question. We had a post about it a couple of weeks ago, and people were really interested. So I was like, well, we got to have Kellie on. She can tell us. So let's tee it up, Kellie. Tell us a little bit about how to do it right when it comes to employing your children. And then I promise we're going to talk about why this can help you.
Yes, absolutely. We will definitely get to the benefits. First off, I'm just so thankful to be here. I think this community is absolutely amazing. And just to be able to be on the back end and watch, like, it's an incredible gift. So good job to all of you and your hard work. But yeah, so as Jamie mentioned, we definitely want to start off on the compliance piece. And so a lot of times whenever you start talking about employing children and hearing as tax strategy, you kind of come across like, is that legit? And I want to just put first and foremost, the IRS talks about one of the best advantages of running a small business is to actually employ your kids. And so there is the IRS, this is completely 100% backed by the IRS. But however, there's definitely the right way to do this. And so that's what we're going to talk about today, to kind of I'm such a black and white girl. Like, give me the law. And then what we do is we talk about it and explain it. And so that's what we're going to do. So first and foremost, your child has to be, in order to employ them, they have to be able to do a reasonable task, and you pay them a reasonable wage, a wage that you would pay someone else to do the job. So think of Johnny down the street, or maybe, someone across town. So think of your child must be able to perform those tasks. So that's one thing, that to make sure that, they're of a reasonable age that they can be able to do that. So I've got a 13-year-old that loves social media. So, definitely that's something that's totally his jam. That would be a great hit. But maybe like a 4-year-old, maybe not so. So you just got to, definitely make sure it makes sense, and also pay on that reasonable rate. So like going back to the example of my 13-year-old, I wouldn't pay him $50 an hour to take a random, pictures, unless he was like skilled and was able to do that. And so a lot of times when it comes down to the IRS, it's just making sure that you've got the substantiation, just making sure the documentation that, you've gone out and you've looked at, what is that task and what is the going rate for that? Does that make sense, Jamie?
Yeah, absolutely. And I think that this is one, so I remember looking to see, because I have a 3 and a 6-year-old. So mine are a little young to really do anything super meaningful or even not so meaningful in my business. So I don't employ them yet, but I did see something, and you can correct me if I'm wrong, Kelly, but I saw something about a 7-year-old, as young as 7, I think the IRS has said, like, yep, as long as you can substantiate what they're doing and it's kind of market rate for what they're doing. A lot of their tasks are probably minimum wage tasks, unless they're doing something a little bit more skilled, if they're a little bit older. But exactly. Yeah, 100%. I think that, if you're, I know people who use them back in the day when we used to like stuff envelopes. I don't know who's stuffing envelopes anymore. Maybe social media is the new stuffing envelopes. I'm not sure. But that was always a task, like getting your kids to do that. So it can teach them some valuable lessons as well. Absolutely. Oh, so the question a lot of people ask, and I think it's a really good question, and it's really good that they're thinking this. I think people think, well, wait a second, a 7-year-old, an 8-year-old, like what about child labor laws? So talk to us a little bit about that.
Yeah, absolutely. And so keep in mind when we talk, and first, before we get to that, I want to talk about the 7-year-old, where that comes from. In the tax court cases, that's the youngest child that's been able to go through in the IRS. So that's where that number comes from. It's not that they get to this magical age. But let's go back and talk about the child labor laws, because there's definitely an exemption there. When we're looking at this, though, we're talking federal. So just in mind, I know you all are from different states, so definitely look in your local area. But from a federal, national level, there is definitely exemptions there, unless your child's doing something like completely dangerous, out like on a construction site or where there's chemicals, but really the exemptions as far as child labor law and, having all the posting and that they get the break time, there's definitely exemptions for that. And that is a link in my article that talks about that, that goes into that exemption. Yeah.
As long as, the big thing is, if you are the owner, like if you are the owner and there aren't other owners, the only owners are the parents.
Yes.
Right. Then you can typically, and again, go through Kelly's decision tree to make sure, but that's generally, if you have other owners, then you're not necessarily going to be able to do that. But there are some ways around it. We're not going to get into that, but there are some ways, if you work with a good tax planner, that even if you have other owners, you may be able to create, or even if you're a corporation, you may be able to create some, I'm not even going to talk about what it's called because people will
a management, family management company. That happens a lot of times. And keep in mind, if you're in a partnership, so if it's you and your spouse that are in that partnership, then that's completely fine. But if it's you and, a friend or whoever, your other partner, there's definitely some rules there that you've got to be aware of.
Yeah. So Liz is asking, in Seattle, minimum wage is $15 per hour. Can I pay my 12 and 14-year-old to shred, file, and organize the office?
Absolutely.
That sounds like a great job for a 12 and 14-year-old.
Yes. Yes.
Mm-hmm. Yep. And that sounds like probably minimum wage makes sense for something like that, because that's probably what you'd pay somebody else. So it's just around documentation. This is another good question from Dana. Do you have to have proof that your rates are reasonable, like compared to another similar job, like a social media manager going rate for a 13-year-old performing similar tasks?
Yeah, that's such a good question. I think, whenever it comes back to the IRS, it's not like that you have to have this documentation just to hire your child. But here's the deal, is that anytime you've got that type of documentation in your file, so if you ever were audited, you've got that substantiation to go right there and be able to say, hey, look, I did the homework, I went and did the research, and here it is. And that definitely states your case and just gives you just a kind of that extra insurance there. But great question.
This is a good question. Do you pay them as a 1099 or as a W-2?
Yeah, so definitely. So let's get on that. That is a great question and kind of brings into the next piece of the compliance piece. So I want you to kind of understand. So you've gone out, you figured out what the task is, what the rate is. Now what you're going to do is you're actually going to employ your child to be able to do that work. And so how do you do that? Just like you would hire anyone else. So it would go through where I would definitely recommend like having an employment agreement. Not only is that something good just to have with your child and kind of teach them, but also just, again, good substantiation to show what they're doing, when they'll be paid, to show it's a real legit job. And then also going through that hiring process. I am a big fan of Gusto and Gusto Payroll. Yeah. And so a lot of times through Gusto, it will go through and ask those pertinent questions like filling out a W-4, filling out potentially an I-9, if you have in your state local, like what you need to do there as well. Like all that documentation has to be completed. And so, yes, so at the end of the year, well, one, you're going to do probably quarterly 941s if you're not already doing them, before. So if you've already got employees, that you're just adding another employee on, right? And then, so you'll have your quarterly forms. You'll also have your annual forms of your 940 as well as W-2 that would be provided. And so it was a great question as far as like, what about the 1099 versus the W-2? Well, actually, whenever we get into benefits, you'll see it's better to hire your child as a W-2 because of the tax rates. So you're going to see that a lot better on the W-2 side.
And also just thinking about like the compliance rules around W-2 versus 1099, I think it'd be hard to justify a 10-year-old being an independent contractor who's not, like being told like specifically how to do their job. Like independent contractors usually are going to bring that expertise in. They're not just going to be taking orders, right? So I think it would be very difficult to justify 1099, and it wouldn't even really be helpful in this instance to do it that way.
Definitely on an ongoing. Now, if you had some seasonality or you just had these one-off projects, because you don't have to provide a 1099 unless it's over $600 or higher. So definitely in that case, if it's a one-off, but that's really not what we're talking about today. And just to really get that benefit, it's really hiring them for that consistent, ongoing type of jobs and responsibilities.
Yeah. And since you mentioned Gusto, I just got to put it out there because I've been talking a lot about Gusto lately. Y'all know this because it's kind of that time frame where a lot of people start kind of first of the year with a new payroll provider. So if anybody is in the market for a payroll provider to employ their kids or to pay themselves as an S Corp, C Corp, or to pay their employees and you want to switch, jamietrell.com/Gusto and you get a $100 Visa gift card for signing up. So that basically will pay for, that could pay for, depending on how many employees you have, that could pay for a couple of months worth of payroll services. So that's not so bad. Okay, so, and we're going to get into the tax benefit here in just a minute. A lot of people asking about that. So what proof do you need for the IRS and does the child pay taxes on the money? So let's start getting into that.
Yeah. So also before we move into, there's one other piece of compliance work that I want to point out, and that is timesheets. So having, keep in mind, and my office is a big proponent of legacy businesses. So this is a great time to teach your child about employment. So if they do go outside of the home and get a job, they know what forms that they're filling out. They know about a contract. They also know how to fill out a timesheet. So this is the time that you clocked in and you clocked out. Just can be something as simple as, a form that you fill out, a template, right? And so that's a really big piece to keep track of. And then also paying them. This is something that there's been court cases on this that, I paid them with food. No, we're not getting into like pizza or, the responsibilities of parenthood, right? But this is more, that they actually get a paycheck. And we're going to talk about what they can do with those paychecks, but that's very important, the timesheets, and then also the actually being paid. Yeah.
Okay, so that's all the compliance piece. Now let's talk about why, other than the fact that it is a great lesson for your kids to be able to make money, learn about, all the things they have to do, saving, all of that. Let's talk about why this helps you as a business owner.
Yeah, absolutely. So this is really, it's quite mind-boggling how much, your child can do for you and being able to save. And so this is kind of where I want you to just take a step back and, think your situation's going to look a little different than, others. And so one, it's going to come down, and you're going to see this in the decision tree, but it's really going to come down to what type of tax entity that you are. So being a Schedule C, which you file on your 1040, an 1120S, which is your S Corp, a partnership, or C Corp. So each one of those has a different way of looking at this. Also in the age of your child. And so whenever you get to the flow chart, you'll be able to see this a little easier to follow. But in a grand scheme of things, the standard deduction for 2020 is $12,400. So what does that mean? That means that you can pay your child up to $12,400 tax-free, okay? Federal tax-free, because that is a complete standard deduction. It will literally wash away all taxable income on their personal return. They'll have zero taxes. Now, depending on what type of tax entity you are, it could also mean that you don't have the employer or the employee type of taxes, like your FICA, Social Security, and Medicare. So that's really where that decision tree is going to get in place. But just to kind of let you know, Schedule C's and partnerships where both, the partnership would be where both parents are partners. They actually, those children that are up to 17 years old do not have to pay any FICA, any Social Security and Medicare. So that's very important. That's a huge, where you're looking at that 15.3% of savings,
Yeah, that's what I was going to say.
When you get into an S Corp and a C Corp, those are a little bit different. You could potentially have some of those, that FICA, or you will have the FICA on there for Social Security and Medicare. But still, think about it, that's up to $12,400 of tax-free, federal tax-free money. That would super help, right?
Yeah, so we'll take it back there, like just to reiterate what Kelly just said. So we've got kind of federal income taxes that we pay. Those are our tax brackets. So you have a standard deduction. Every person, right, has a standard deduction that if they make $12,400 or under, it's a 0% tax rate bracket basically for federal income taxes, because that's your standard deduction. You can exclude that when you're calculating out your base for what you owe taxes on. So that's why that $12,400 is if you keep it to that, if you're paying them like $1,000 a month, let's say, to do the jobs that they're doing, they will be under that and they won't owe any federal income tax. Now, if you don't pay them that as a business owner, that means that's probably going to drop to your profit line and you're probably going to have to pay taxes on it. Again, it kind of depends a little bit on your structure. So you can give that money to your kids instead. And then here's the fun part, you guys. Then you can go throw that money into a Roth IRA for them.
There you go.
And now you just also get that tax benefit of having the Roth IRA up to the limit. So there's some great ideas.
Yeah, the Roth is absolutely amazing. So just to talk a tad bit about the Roth is that the money that is put into a Roth now, it grows. So it's paid after tax, which in their case is at 0%. So it grows in that account tax-free. So when they get to retirement age, they can pull that money out and they're not going to pay a lick of tax on it.
Exactly. So they put it in with no taxes and they take it out with no taxes. You guys, this is the best thing that you can do for your kids. If you can start setting up a Roth for your kids when they're like 10, I mean, they're going to thank you, because that's going to turn into a lot of money over time. So that's actually what I recommend. Is you can also let them have it and have that be kind of their, if you normally would pay them allowance, it's still going to save you money. You're not having to hand it to your kids. They're actually earning money. But putting some money into a Roth, I think, is a great idea. What if you have multiple kids? Is it $12,400 each? Yes.
Yeah, that's right. That's right.
For each kid.
And keep in mind, the rate over $12,400 is 10%. And so it's still kind of going to be lower than what your rate's going to be. So whenever you look at this, I'm a big proponent of Roth. I'm also a big proponent of 529 plans, being able to start the tuition, same exact thing. You're putting it at a very low post-tax rate. And that money is growing as long as the 529 or college savings is used towards tuition, that's tax-free money that they're able to take. So it's both are great opportunities.
I love the 529 because we're already contributing to a 529 for my kids.
Yes.
And when my son is old enough to take on some duties, I think that's what we'll probably do is kind of give him some spending money. Yes, but he doesn't need, to be making minimum wage as like a 7 and 8 year old. So we will probably end up putting that money that we were going to put in the 529 anyway, but now we get to save some taxes on it as well. This is a great question from Crystal. Does this mess up your child as dependent deduction on your taxes, or does it matter?
Oh, that's such a good question. No, it doesn't. So because being a dependent means that you're providing over half of their support. So this is definitely, I know my kids are way more than that. So no, this does not mess with any of that.
Exactly. If you're still providing shelter and food and paying for the vast majority of their expenses, right? Which, if you're $12,000, I don't know what parent is not spending a heck of a lot more than that on their kids. If you are, good for you. Let's see. Another good question Christina asked. Do you need your kids' approval to make that decision for them as far as like where the money goes? I assume you mean.
I love that question because I think that brings in a lot of conversation. And so like, as your kids are older, obviously if they're doing some of these tasks, this is a great point, a great way for you to be able to have that type of conversation with them about where does their money go? Especially, I will never forget, like whenever I got my first paycheck and I'm like, where did who is FICA? Like, who is this? And so I think at that point, you're able to teach them and being able to say, it's still your money. It's just growing over here in another fund to help you, and so I think just having that conversation, it just helps equip your kids for more and more life. Great question.
Yeah. I think legally there's no, if they're under 18, I don't think that if they're over 18, you might have different situation where as far as like deciding where their money goes. But I think if they're under 18, you're their legal guardian. This is another good question. Such good questions from you guys. When the kids receive a W-2, how is it claimed on a return, yours or their own?
Oh yeah, that is such a good question. So this is actually earned income for them. So where you might see, like you might have an investment account for them right now, and they might get some interest and dividends through that. That's unearned income. In this situation with the W-2, this is earned income. And while that matters is there is what's called a kiddie tax. And so earned income would be on their tax return. Depending on how much unearned income, you might have to file that on your personal, on the parent's return, and be taxed at your rates. But in this case, we're talking about earned income. This would be their tax return that they would have.
What's the limit for when you have to file a tax return in general?
Yeah, so $12,400 is because of where the standard deduction is. So if you get it.
Yeah. So likely they wouldn't even have to file a return at all if you keep it under that 12,400 limit. So that's another benefit, you guys. Obviously, you want to keep all of that. You want to be able to support all of that because you're using this as a deduction for you and your business. So you need to have all the support for how you paid them and that you did it correctly and that you did a W-2 and all of that. Do you have to issue a W-2? I assume so.
You do. Yes, you do. Yeah. That is a requirement.
So you want to make sure you do all of that the way that you're supposed to. Do you have to pay them via payroll, or can you pay them, a different way? If you paid them in cash, does that still count?
Yeah, you just need to be sure that what the compliance piece of this is that you've got those quarterly returns, that you've got the annual return and the W-2. So however you pay them, that is completely fine. If you, do something outside of a payroll system, just make sure you've got the compliance piece together. That is very important because there are penalties and late fines on that. And also, before we go to this question, I do want to just mention that whenever I see a W-2 come through, this is a personal, how I do this in my office, is that the IRS is like really big on this tracking of like, okay, I've got a W-2 here and I don't have a tax return. And so that is something that, I would talk to your personal CPA, see what they feel. If your child's got a $10,000 W-2, do they want to file a return or not? In my office, I don't like for my clients to get any type of IRS letter. And so I say, hey, let's just file it. Let's just make the IRS happy. But definitely talk to your personal CPA about that, because there's definitely limits on the earned income and not having to file a return too.
Yeah. So Kathleen's asking, is there still a tax savings if we pay our college age kids to work for us?
I love this. Yeah, this is where it gets good, because here's the deal. Your college age kids can do a lot more and you can pay them a lot more, right? And so definitely there's a savings for them, because they're still going to have that they're going to be in a lower tax bracket more than likely than you are. So yes, there's still that tax savings piece there. Now, keep in mind, though, that they would be subject to Social Security and Medicare. And so would you on your employer side. On the employer tax side. So just keep that in mind. It's not 100% like if they were younger and you were a Schedule C or in the partnership where both spouses were, or both parents were a partner. But that's a really great question that we see this a lot in college age kids. We also see this in parents that we're supporting. And so maybe, if like a mom or dad or whoever lives with you and they're doing some work for you, then there's definitely some benefit there too.
Yep, absolutely. Let's see. And yes, this will be posted. The replays are always available. Hey, Bree, how's it going? Another good question. You guys are asking, so you're on fire today. Kelly is asking, what about workman's comp and unemployment costs?
Oh, yeah. Oh, we got to get into the unemployment, right? So here's the deal with both of these. These are going to be more of a state and local. So definitely check in, within your workers' comp, see how that applies locally to you, as well as unemployment. Every state's unemployment works differently. From a federal unemployment, there is no federal unemployment tax on this, but from depending on what type of tax entity you are, let me be sure and put that. But as far as a state, that would go down to your state and local. Like I know here in Texas, there is no unemployment for children.
I love this. Liz says her 12-year-old's listening and likes to plan for retirement in college. They're like, I love that.
I love it. I love it.
That's awesome.
I grew up. So when I was about 12, actually my family had a pet store. And I worked in there. And so I just think back to all this. I'm like, golly, I wish I had like this big Roth savings, or something that came from back then. Because I definitely put in the work. I don't know if I got the benefit out of it like this. So.
I know, exactly, right? So this is a good question too. How will this impact financial aid for educational purposes? Does this have an impact there?
Yeah, this is definitely something I can't speak at length on. I would definitely, as you're getting to that point, in preparing, just keep in mind, like a lot of kids that are, going into school, into college, they've worked through high school. So I'm not seeing that a lot of kids that are going to be between the ages of 14 and 17 are going to be making $100,000 out of your business unless they legitimately are doing those tasks. So definitely, I would definitely check in with the school that you're looking into and within their financial aid, just to understand where that goes.
Yep. Grandchildren?
Oh yeah. So grandchildren, it's going to be, where they're not going to be a dependent of yours. So you're still going to be able to pay them. So keep in mind, whatever federal tax level that they're at is probably going to be lower than what yours are. So I think that's a big piece of looking at it, from a tax savings point, even if you don't get the tax benefit of with the FICA, it definitely in other avenues of the federal tax rate, that's going to be a huge benefit there.
And I would guess that you may, because you're not a direct parent, those child labor laws may be applicable. I would wonder on that, because I know the exception is for parents. So I don't know if you're a grandparent, you may not, those younger kids, you may have to follow whatever, the child's labor laws are for your state.
That's important.
If I employ my 12 and 16-year-old kids and pay them both $12,400 each, you would be able to benefit from both of them. It's each kid. Yep. Let's see. 1 second. I think that's all the comments we have. Oh, good.
Oh,
I'm not missing anybody. Such good questions. So yeah, make sure that you guys go download Kellie's decision tree, because there are some things around entity type where, even if you can get out of those, like we've talked about a little bit, the federal income taxes are one thing. And with those, it's always best to shift to a lower tax bracket, right? So even if you're above the 12,400, you're still going to get a benefit. That first 12,400 is going to be exempted, and then everything above it's probably going to be at a lower tax bracket than you are at. So it's not necessarily a cap, and it can benefit even if you have like if your kids are 35 and they need some extra work, this can still help depending. So just there are a lot of different things like that. The rules around when you can get out of kind of your employer and employee side of payroll taxes. Those also will change a little bit, like Kellie said, depending on your specific situation. But I would go and download her kind of her article on this, which gives that decision tree, and so that'll help you as well. And if you want, I think this is a good thing to partner with a CPA on too, especially if you're in that spot where you're an S Corp or a C Corp and you want to think about setting up one of those family management companies, which now has my head kind of thinking about when my kids are a little older. Then you probably want to be working with a CPA on it. So I definitely would check that out. We have a great preferred vendors list as well. I don't think I posted that, but y'all have probably seen it everywhere. We have some great vendors you can work with who can help you getting all of that set up as well.
Yeah.
So,
absolutely.
Yeah. Oh, and there's one more question. I missed this one, I think, from Christina. So if someone has had their child volunteering, can you back pay them for time served as long as you can come up with timesheets that are accurate? What would you say to that one, Kellie?
Yeah, I mean, there's definitely that point where you got to go through and have that child set up. And so I think that at that point, when you've got to get them set up as an employee and then have them paid, I don't see anything wrong with it as long as it's in that tax year, because that W-2 is going to be a reflection. If it's something, from like 2 years, I wouldn't do that. I would just stay, just fix it from now on,
Yeah.
But definitely the 941s, those are quarterly returns that are filed. That's still a requirement until the IRS gives you, if you do qualify for an annual 944. So you have to file those quarterly 941s. And so that would also be, sometimes that plays into it too, as far as what the timing goes, because which quarter was it paid into?
Yeah. 100%. Yeah. So this was a good one. This was kind of by popular demand. And so this topic came up and people had so many questions. So hopefully this will be helpful. We'll leave the replay. The replay is available within the Facebook group, and it's also available on YouTube. You can go back and rewatch it if you want to, but make sure you download kind of Kellie's article, because I think that'll help also to see it and to follow your specific situation and how it will help you. But always make sure you have, that's the big thing, is make sure you have everything buttoned up, because obviously you want it to be on the up and up. You don't want to pay them for sitting in your office next to you. They need to be actually working. They need to be actually doing something, and it needs to be commensurate with their experience. Because I think if you were ever audited, that would probably be the first thing that I would look at is, okay, you paid your 8-year-old $40,000 last year. What exactly were they doing, right? So I would say, you want to make sure that you're looking at how many hours are they actually working, what's the right rate for that, and have that documented as best you can and put it in a folder somewhere. And then if you're ever audited, you have it and you can say, here's all that documentation for you. I'm always a fan of just over document, especially when it's anything like this, right? This is one of those areas where it's a great opportunity, but you got to do it the right way.
Yeah.
Right.
Yep. Absolutely.
Yes, Autumn, it should be linked. Hopefully you guys are seeing it. If not, I'll come back into the comments and link it, but it should be linked above if you're watching on Facebook. So it should be up above in the description of this live, or if you're watching me on YouTube, it should be linked down below, and you can just go sign up for that and she will email it over to you. Glad this is helpful. All right, guys. Well, we're going to let Kellie go, and I'll see you guys. Hopefully everybody hopefully everybody who's celebrating Thanksgiving has a happy and safe Thanksgiving and eats lots and lots of turkey, because that is my plan. So, there's a description, but it's not linked. Oh no, I'll fix it. I'll come back and add it here in just a minute. All right, guys. See you guys later.
Bye. Bye.